Hey guys, welcome back. In this particular video, we are going to talk about financial market. Financial market, one of the most interesting market in the world. I hope you guys are aware about what is financial market and what are the key component of this particular market and all. So basically, whenever we talk about the financial market, financial market where we generally deal in financial product. Like now, what are the financial product? Like we have shares, bond, mutual funds. We have different government securities like treasury bills, dated government securities, some private participation as well, like commercial paper or equity, debt, and all. Right. With this particular video, we will understand the basic part of financial market. What is financial market, or the importance, the objective of financial market, and the functions of financial market, and the role and responsibilities, and what is the further categorization of financial market. Like hope you heard about the money market and capital market. So what is the difference between these two? Okay, so we'll talk about these ones. So first thing, what is financial market? Whenever we talk about financial market, it is a market which deal in financial instruments. Financial instruments like shares, bond, mutual fund, debentures. We have derivatives. We have further classification for these particular product as well. Like we have options, future, forward, swaps. So there are so many product, right? So whenever we talk about financial market, it is further categorizes. It is further categorized into two part. One is money market, another one is capital market. So with this particular chart, we will start this particular video. So as you can see in this particular chart, guys, so financial market, which is further categorized into two part. One is money market, another one is capital market. So money market, which generally deals in short-term securities. So whenever we talk about money market, it generally deals in short-term securities. Now what is short-term or what is long-term? Similarly, the capital market that generally deal in long-term securities. So the difference between time, short-term and long-term, that is short-term means less than 1 year. Whenever we talk about short-term and long-term in finance, it is less than 1 year. And in case of capital market, that generally deal in securities whose maturity is generally more than 1 year, right? So for a financial market is further categorized into two parts. One is money market, which generally deals in short-term securities, from where companies and government, they generally fulfill their short-term requirements. And if you talk about the capital market, which generally fulfill the long-term requirements of companies, or where basically investor, they generally made long-term investment, right? So first we'll talk about money market. So money market is further divided into two parts. One is unorganized, and next one is organized. So unorganized means where we do not have a proper regulatory body, where we do not have proper rules and regulations, right? So if you see the example for the unorganized market, like we have chit funds. I hope like so many times you heard about the chit funds, like Sahara Group, Sarda Group, Pulse Group. So there are so many scams which generally involve in this particular one. The reason being because we do not have a proper guidelines for this particular area. Nidhi companies, the second example is Nidhi companies. So Nidhi companies are like, it's a group of companies. Let's say for major corporate, they create a corpus and they are using that particular money. Like this is similar to your we can say this is similar to the committee system. Okay, so in committee system, basically 2 3 or 5 10 20 people, they generally deposit money, and whoever the member who need that particular money, they generally lend that particular money to the that specific member. So same in case of Nidhi companies. Here 4 5 organizations or corporate houses, they generally deposit their funds, and out of these particular members, whoever required that particular fund, they generally lend to that particular person on a certain rate of interest, right? So we have money lenders, we have indigenous bankers. So these are the example of your unorganized market in case of money market, right? Unorganized money market. Organized money market, which means for this one we have certain set of guidelines. These guidelines are generally issued by RBI or Government of India or the relevant regulatory authority. It can be SEBI or any other institution as well. Correct. So in case of organized market, we have treasury bills. In later on, we'll discuss these particular product in detail as well. So treasury bill, which is generally issued by Government of India, or sometime we can say it is issued by RBI on behalf of Government of India in different denomination like 14 days, 91 days, 182 days, 364 days. So when Government of India require fund for short-term duration, they issue treasury bill in the market. Correct. So we'll talk about these particular thing in later. Then we have cash management bill for the requirement of companies. Again, we have commercial paper, we have certificate of deposit through bank. These are issued by bank. They fulfill their short-term requirement through a certificate of deposit. Commercial paper are generally issued by the corporate houses. So they fulfill their short-term requirement by issuing these particular instrument. So money market, which is basically deal with short-term securities, which means the product duration or the product life is less than 1 year. We have number of product in this particular category as well. So for categorization is based on two things. One is organized and another one is unorganized. Or if you talk about these particular product, I'll come with a detailed video about money market. So where we will understand the different product of money market or these particular instrument in detail as well. So next one we have capital market. So capital market, again we have further categorization for capital market as well. First one is primary market. So primary market where securities are listed. So basically you can say it is generally known for listing, or you can say here we generally introduce securities. So it is generally known for introduction of securities. Let's say as I earlier told you, the capital market which generally deals in long-term securities. Long-term securities like shares, bond, mutual funds. So if you are listing your company in a stock market, so that listing will happen in primary market through IPO, initial public offering, right? Or even if any existing company, they want to sell some portion of their company shareholding next time, third time, fourth time, so that there is a process that is called FPO, follow on public offer, right? So IPO, FPO, NFO, these all are the part of your primary market, right? So primary market, that is generally known for listing or introduction of securities. Then second one is generally that is called secondary market. So secondary market which is generally known for trading. So secondary market that generally known for trading of securities, right? So in primary market we are listing these particular company. Let's say any XYZ company, they came with their IPO, so that is listed in the stock market. Then in secondary market, basically the investors, they are generally trading among themselves, right? One is selling. Trading means buying and selling of securities. Whenever we use this particular term trading in financial market, which means buying and selling of securities, right? So primary market where an investor, they are generally purchasing shares directly from owner. But in case of secondary market, that is like already the listing process is done. So here the investors are generally trading themselves, right? So one investor is purchasing from another investor. But in case of primary market, we are generally, or investor, they are directly buying these particular shares from owners, right? So primary market is for listing or for introduction. If some new mutual fund came, so it will come through the primary market. If any company want to list their shares in the stock market, so they'll list in primary market. And if you want to trade on daily basis or on delivery basis, intraday trade or delivery basis, so you'll deal in secondary market, right? So hope the basic difference is clear. We'll come with we will go through, or we'll jump in, we'll make a deep dive in this particular concept as well, so when we'll study the capital market. So primary market, we have the product line is same, that is equity and debt. Equity means shares and debt means you can deal with bonds, okay, long-term securities. So equity, like in primary market, we are listing that particular share in secondary market, we are trading in that particular share. And that means bond. If any bond or any mutual fund, that is the listing process will happen in primary market and the trading process will happen in secondary market. So with this particular chart, I hope you guys get an idea about the financial market. So financial market, as the name state, it deal with financial instruments. So financial instrument like treasury bills, cash management bills, certificate of deposit, commercial papers for short term. For long term, we have shares, bond, mutual fund, derivatives, so debentures. So there are so many products as well, right? As per the requirement of customer. So hope you get an idea about this financial market. Now some theoretical aspect as well. So this is very basic one. I hope you'll get easily. So now if you talk about the what are the objective of financial market, why financial market exists, right? So let's say if you are running some company, you need fund to grow, or like you need to fund so you can invest in some new product. Okay, so you can invest in your idea, so you can expand your business. So for that particular one, you have 2-3 options. One is you can invest your own money. Let's say if you don't have that money, you can borrow money from banks. One another option. Then third one is financial market. You can sell a part of your ownership to the investors, and on behalf of this particular thing, you'll get money from investors, right? Like let's say if I'm interested in your business, so I'll buy your shares in the form of IPO and all. So if you go for the basic definition of shares, that is part of ownership. So you selling a part of ownership to the general public, and in return you are getting some money, right? So if you see the first point, that is to mobilize the fund in the market. So through financial market, as I earlier told you, let's say some XYZ company, they are listing in the market. So if they are selling some portion of their ownership to the public, so on the behalf of this, they are getting some money. So there is a circulation of money in that particular company as well as in economy. Increase efficiency of companies. So that company or every company, they need fund to invest in new ideas, new project. So for that one, so the best solution is they can raise that particular fund from financial market. They can go for bonds, they can go for shares or any other tool as well. Then we have wealth maximization for of the shareholders. So every shareholder want to expand their business. So with this particular thing, they can grow, right? Or even like let's say if they are investing in some new ideas, some new project. If that project work, so their wealth will they'll gain profit from the market as well. Okay, or even being a shareholder, if you invested in that particular company, if that company perform well, so you'll also get profit from that particular thing, because you are a shareholders, which means you own that particular company. So as company will grow, your share price will also grow, right? Then proper estimation of financial requirements. So with this particular market, let's say if you want to study any economy, so the best parameter are the indices of that particular economy. So let's say if you want to study Indian market, or how the corporate houses are doing, so you can study the analysis of last 6 months for Sensex or Nifty, right? Sensex basically it's a index for BSE, and Nifty is an index for NSE, right? So how these particular indices are performing in last or in past 6 months, so you can on the basis of this, because indices, the performance of indices is generally based on the company's shareholding or share prices movement, right? So if there is a positive sign, which means there is a positive sign in that particular economy, that particular economy have the investors faith and all, right? So with this one, you can also judge the requirements and all. So objective, I hope this is clear. Still guys, if you have any query related to any point, please do mention in comment section, so I'll try to answer your queries as well, right? Next one, we have the functions. So provide facilities for interaction between investors and borrowers. So investors and borrowers, who are the borrowers? Corporate houses. Let's say if you are running some XYZ business, you want to expand your business, okay, you have some new ideas, you have some new project. To run those particular project, you need funds. So for that particular thing, you definitely need money. So you'll borrow. You will be borrower in that particular case. So I'm an investor. I want to invest in your company. I like your idea. I like the performance of your company. Okay. So I'm investing. So this particular market provide a platform between investors and borrowers. Second one is provide security to dealing in financial assets. So not only, like, let's say if being an investor, I want to invest in your company, I need some security. Okay, so whenever investor they made their investment decision, so they also need some security. So this financial market or the financial regulators like RBI, like SEBI, like IRDA, so the government of that particular country, so they generally provide that particular security, they provide that particular trust to the market. Like in case of India, we have SEBI, Securities and Exchange Board of India, which generally provide trust to the investors, who generally protect the interest of investors, right? Then we have reduced the cost of transaction and information. Now financial market which generally provide you like a one station solution. Like let's say if any company is working in south and you live in north, you do not know about that particular company, but with the help of financial market you will get everything, like the company financial statement or the credit score on for that specific company. So you know everything about that one. So the information, or even if you want to let's say if you live in a remote part of the country, if you want to invest in some good company, so from that there only through demat account or through different trading platform, you can invest in that particular company. So there are so many importance, or even to run an economy we need finance, and this solution is generally provided by financial market. So hope this is clear to each and everyone. Now so far we generally talk about what is financial market, the basic things. The as with that earlier chart we talk about financial market is further categorized or divided into two parts. One is money market, another one is capital market. So financial market is basically which generally fulfilling the requirements in the money requirements of companies or for government or for any other one. Okay, it generally providing a platform to investors to invest in their in different companies, or in basically providing the investment opportunities or alternate to the investors as well. Now the entire working, the whole working of financial market is further categorized into two parts. One which generally deal with short term duration, as I earlier told you. So money market is generally for short term, and another one is long term. So if your requirement, being a borrower, if your requirement is short term, so you'll deal in money market, right? So you have different money market product, you'll go for those. And if your requirement, being a borrower, like being a government company and all, if your requirement is long term duration, so you need fund for 5 years, you need fund for 10 year, 15 year, even 30 years, so you can go for, like, your option is capital market, right? So if you talk about the money market, is like, if you talk about the major regulators, so money market is primarily regulated by RBI. Do remember this, okay? So the major product of money market is regulated by RBI. But in case of capital market, if you talk about this market, so it is regulated by SEBI, Securities and Exchange Board of India. Okay, so even you know the further classification of money market, organized and unorganized, and capital market, primary and secondary market. Hope you remember these particular things clearly, right? So this is all about the requirement. So on the basis of requirement of borrower as well as investors, we further categorize it among two parts. One between two parts, one is money and another one is capital market. So I'll give you the basic idea about these two market, and even I'll come with a detailed video based on money market and one for capital market and their product as well. Money market is like, whenever you study money market, the study areas are quite limited, but if you study capital market, the area is very big. Like you have to understand the different product, like shares. If you study shares only, so you have different type of shares. Okay, if you study bond, you have different type of bond. If you study derivatives, you have different type of derivatives, and derivative is one of the largest market in the world, one of the largest financial market in the world. Okay, so In upcoming videos we'll cover that particular one. So first, money market. I hope now everybody is clear with this particular definition as well. So money market is the market where companies and government can borrow short-term funds. Short-term means up to 1 year, or you can say the market where where the borrower, they generally raise funds for less than 1 year or short-term period, or investor, they generally made their investment in short-term securities, majorly regulated by RBI. There are some areas where we have like SEBI intervention or even ADA intervention as well, right? Second one is capital market. So capital market is generally known for long-term securities. Securities means equity and debt. Equity and debt means equity means shares and debt means bond, right? And the combination of equity and debt is mutual fund. So we'll talk about these particular thing as well. So capital market is a market where government and companies can raise long-term funds by issuing securities. So whenever we'll use this securities term in financial market, which means equities and debt, and equity means share market and debt means bond market, and the combination of these equity and debt. Whenever you study mutual fund, so mutual fund is nothing, it is basically a combination of equity and debt, right? So hope this is clear to each and everyone. So next thing, we already discussed this part as well. So primary market, capital market, further categorization is primary and secondary. So primary market, which is generally known for introduction, as I earlier told you. So introduction part. So introduction of securities, as I earlier told you, capital market that generally deals in securities, and the introduction of securities that generally happen in primary market, and secondary market that is generally known for trading. So the meaning of this particular term is trading is buying and selling of securities. So that buy sell that generally happen in secondary market. So basically capital market, primary, which is known for listing, where we have different processes, like we have IPO, we have FPO, follow-on public offer, FPO, then we have NFO, new fund offer. We will understand these particular thing. NFO, new fund offer, sorry. And in trading, we have intraday trading. We have intraday means daily trading. Okay, so we have apart from intraday, we have delivery trading, or even like you have different product in this particular market as well. So hope this is clear to each and everyone. So guys, with this particular video, we generally understand the basics about capital of the basic about financial market. So what is financial market, and what is the further classification of your financial market? What is the basic about the money market, and what is the basics about the capital market? Hope you get these particular thing clearly. So in our upcoming videos, we will talk about the money market in detail, or we will understand what are the major component of money market, like the instruments, like we have treasury bills, we have dated government securities, we have commercial papers, certificate of deposit, call money, notice money, term money. These all products which generally deals, their maturity is generally less than 1 year, so they deal in money market. If you talk about the capital market, so here we have different, like the two type of market, primary and secondary. So we'll talk about the IPO process, the FPO process, the NFO process, or the demat account, the trading account. In secondary, we'll talk about the trading things, how we generally trade in securities. What is shares, what is bond, what is mutual fund, what are debentures, what is derivatives, what is a further classification of derivatives, like we have future, forward, option, swap, so call option, put option. So we'll talk about these particular thing in our upcoming videos. So this video is generally for a basic about the your financial market. Hope you get these particular thing clearly. Still, if you have any query related to any point, please feel free to ask. Do mention in comment section, so I'll revert your queries. And if you like the video, please do share with your friends, do like the video, and if you're new to my channel, please do subscribe. So this is it for this particular session. I'll see you with some more videos. Thank you for watching this video, guys. Bye bye, take care all.